Hi guys, and welcome back to the channel. Now in today's video we're going to be doing another portfolio update on my new investing series that I've built over on InvestEngine. If you've been following since April, you'll know this is a new strategy I put together where I've built a globally diversified fund utilising these 6 ETFs. Combined, these ETFs closely mirror that of the FTSE All-World Index, not only give me that global exposure, but they also provide me with lower fees, higher dividends, and more control over my overall allocation within the portfolio. Part of the reason I'm doing this investing series is to show how simple investing could be for the average beginner. Investing doesn't have to be complicated or intimidating, it's all about contributing regularly and letting time do the heavy lifting. That's exactly what I try and cover on this channel, but also through these portfolio updates to give you a transparent view month on month on what that looks like. So with that in mind, let's take a look at the portfolio for this past month. Okay, so jumping straight into the portfolio here, you can see that I'm using the desktop version of InvestEngine on the website. However, most of the time I use the mobile app, which is equally as good and obviously a lot more handy to use on the go. And if you're looking to invest through InvestEngine, the likelihood is you'll probably use the mobile app. So I think next video I'll screen record the phone version, just to give a slightly different take on that. But jumping into this now, you can see the total balance currently stands as at £6,668.55. You can see that I have no cash within this account. Everything is within this globally diversified fund that I've built, and I've named that the Elevate All World Fund. I'll also leave the link in the description if you wanted to copy this or mirror this. It'll send you a link to exactly the splits and the ETFs that I've selected here, so you can copy or mirror this exact portfolio should you wish. So yeah, top line stats, it's currently showing that we've got a 19.28% rate of return. The other piece that you can also see is the savings plan of £1,000 a month. So that goes in on the first of every month, whether the market's high or low. You know, after payday at the end of the month, on the first of every month, £1,000 of my money goes into this account. And that's then split out between these ETFs and the weightings that I've chosen, which I will show you shortly. So if we click within here, this gives us a lot more data to go off. So if we start here, we can see, yeah, you can see the date there. 6th of April is when we initially put some money in, and yeah, got us up to 1,000. The blue line on this, shows when I've added money, and the green line is the overall value. So that's the value I've put in plus any gains. And yeah, look, we can see that we're just, we're closing in on that £7,000 mark, which I'm really happy with. A couple of the other stats we can see on here, the total expense ratio. So this is, again, one of the reasons I built this portfolio, is to build something with really low fees. Fees, just 0.06%, that is low. Even if it was a bit higher than that, you might still think that that's a really low percentage. Like, would you really notice that as a cost and a fee? Possibly not so much now, but in 25, 30 years, like I said, this is a long-term approach. That's when those fees on quite a large amount really start to eat into your investment. So yeah, really key here, 0.06% for a globally diversified fund is possibly the lowest, if not one of the lowest that you can get to in the market. And then the yield here is our dividends. So this is a share of the profits from companies within this fund. So this is a dividend paying fund. You could also build this as an accumulation fund if you didn't want to manually invest these dividends yourself. You could absolutely do that, but from my point of view is I like the choice of being able to do what I want with that, with those dividends. For the next 10, 15 years, I'll probably be reinvesting that, but down the line, I might want to use those dividend payments for something else. So I like to have the options there. So that's what that essentially means, the yield there. And yeah, so let's have a quick scroll down at the 6 funds here. So the SPDR S&P 500 ETF, that makes up around 67% of the fund, again, closely mirroring that of the FTSE All World Index. And you can see here on that particular one, 67% or 67.1% of our money is invested in that. And we're getting a return of around 18.17%, which unbelievable returns really for what is ultimately is around sort of 4 months. Really happy with that. Moving down onto the next one. This is a Vanguard ETF, and this is the Vanguard Developed Europe. So developed countries, developed companies within this ETF, excluding the UK. I'll cover that slightly, why we're excluding the UK, but eagle-eyed viewers might see that we've got a UK FTSE 100 ETF here, which is why I didn't want the overlap. So that's performing really well actually at 16.61%. Moving down slightly further, we've got the emerging markets, which makes up around 9% of this fund. Equally, almost 19% of growth on there as well, so £59 of growth there. The Amundi Prime Japan Fund, so we're now getting into the kind of top end of this ETF in terms of this portfolio, and which ETFs are really standing out from the rest. 21.1% growth on this ETF, and sometimes it makes you wish that, I wish I had a slightly bigger portion, but this will go up and down, time to time. So that covers our Japan exposure within the portfolio. We've then got the HSBC FTSE 100 ETF, which again, 18.31%, really solid gains. And then finally, we've got the Vanguard Developed Asia Pacific ETF. And this one, you can't quite see it on there, but this is excluding Japan, because as you'll see, we've got Japan covered in this one. So overall, that nearly 26% of gains on that particular fund, and it just so happens it's my, it's my smallest piece of the puzzle. So the actual amount I'm getting out the other end isn't massive, but it doesn't concern me. I don't look at this and think, I need to put more money into that particular ETF because it's performing really well. It's performing great now, but that's no guarantee of future returns. So as it stands, as a set of ETFs, really happy with the performance of this. And like I say, it's only been around sort of 4 months' time. Now, I have to come clear here a little bit in that these gains are not normal. The market had a massive dip around the sort of March, April and May time, and that's when I first started pumping some money into this. So when the market dipped and now it's kind of on its way out of, it's rebounding, I've capitalised on that rebound, which is why these percentages are so high. Either way, I would have, made gains and growth in this time had there not been a dip, because the market has sort of rallied recently. But make no mistake that these gains are quite unheard of unless you do what I did, and that's invest in a dip. Outside of this, we've got a dividends tab. And last month and this month, we had our first set of dividends. So let's have a quick look at that. We can see the total dividends received is £25.90, which it's not life-changing, but it's dividends. And it's, the way I see it, it's free money now in my account, which I can now do whatever I want with. So let's cover July quickly. Oh, if that'll let me click on there. Here we go, perfect. So the first dividend we got here was £7.85, and that was from that, basically the biggest portion of this fund, which is the S&P 500, the SPDR fund. That paid, it's got quite a low yield, that one, so that's why we've only got £7.85, despite that being the biggest portion within this fund. On the 2nd of July, we've had a small dividend here of £9.55 from the Developed Europe ex-UK ETF. We've had just over £1 from the Asia Pacific one, which is the smallest portion within this portfolio. And then £3.30 from the Emerging Markets ETF. So £21.75 there. If I click back here, and then in August, this is where our UK, so this is where the HSBC FTSE 100 ETF paid us a small dividend of £4.15. So just shows you, even in the space of a few months, we're already getting a little bit of income. And granted, it's not enough income to live off by any means, but it's a start. And you've got to think, once we're at a point where we're maybe 10 times what this portfolio size is, this is probably looking like hundreds of pounds rather than sort of £25 as it continues to grow. So really exciting. I personally love dividends. It feels like a bit of a, free money almost, even though it's not. It's a share of the profits from the companies within the portfolio. If I now step into our analytics tab, again, I always like to cover this. This gives us a nice split of where our money is broken up into. Again, the ETFs dictate, you know, where this is split up, but these percentages here, so North America 63%, Europe 10%, etc., etc., that does mirror that FTSE All-World index, which is the main goal of this portfolio, is to invest globally with the lowest fees possible and with that flexibility in that, you know, the key reason for me building this portfolio really was that, say the Japanese market, for example, dipped massively. Something happened, it dipped by 20-30%. If I was trapped within a globally diversified fund, which was just a one-size-fits-all, like VWRL, I wouldn't be able to invest in just the Japanese market. I'd have to invest in a bit of everything, which isn't really what I'd want to do. Whereas the way this is set up, if I see a massive dip in Japan, for example, I think this is an opportunity to capitalise on this. I could put £500, £1,000, whatever it is, straight into my Amundi Japan ETF. So again, I'm able to capitalise on the different regions, separating them out without that kind of blanket approach of having to buy everything else at the same time, which is a key reason why I built this portfolio. Moving into sectors, we've got industrial, technology, financial, consumer. So industrial and financial are typically seen as more stable. When compared to technology, it can be quite volatile, so fairly evenly split across the board. Obviously dips down towards the bottom, and then sector in the other section, if you like, is around 17%. So yeah, rough sort of split, but where I'd expect it to be. When it comes to holdings, so this is a really useful tool that other platforms don't necessarily offer. So many viewers may know that I also invest on the Vanguard platform, and whilst that has some nice graphics, it doesn't let you pick out key details. So if I'm ever looking at a particular stock, for example, and I'm curious to think, okay, within my global fund, I wonder if I'm invested in that company, I could type that in there. You know, so I could put SoFi, Sofina, or you know, I could put Microsoft into there, for example. And again, Microsoft straight away, I can see of that amount I've got in there, £320.86 has gone into that particular company, which I really like that. It just means I've got a really good eye on where everything's split. These are all companies that you'll recognise anyway. So yeah, really nice metric. And then also, again, if we were invested in bonds as well, or even you know, commodities such as gold, silver, whatever it could be, this would give you a bit of a split on, you know, in the different areas your money's broken up by. But yeah, for us, it's pretty much 100% in equities, tiny bit in cash, but that's the cash from the dividends I've received. I've not allocated that to anything yet. It's only £26 or whatever it is, you know, that kind of amount. When the market next has a bit of a dip, I'll probably invest that £26 across the board, or within a particular region should that market dip. So yeah, that's a quick summary of the portfolio for the month of August. So that brings us to the end of this month's update, but as we've seen over the last few weeks, the market dips and then it can also rally, so the performance is always fluctuating at any time. At a rate of return of over 19%, I'm really happy with how this is shaping up so far. It's still really early days, but that's the beauty of these portfolio updates. We can track and see how these global events can impact the portfolio. It'll also show in real time how a diversified approach is quite an easy way of riding these highs and lows, but overall benefiting from long-term growth. I'll be doing these updates every month, breaking down contributions, market updates, and also the portfolio performance. If you'd like to keep following along or even mirror this portfolio yourself, I'll leave the link in the description for this. If you found this video helpful or even motivating, then please do consider subscribing for next month's update. I'd also love to hear from you guys, so make sure you drop a comment below and let me know how your own investing strategy is going. Thanks for watching, and I'll see you in the next one.